Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have started the new subject financial institutions and market. In the first video I have explained you about the meaning of the concept of financial system, financial market and functions of financial system. These three topics I have already explained in the last video. So if you have not watched that video, go to the playlist of my channel, select the subject financial institutions and markets. Watch the first video, be clear about the concept of financial system. And in this video, I am going to explain you about the structure of Indian financial system, how the Indian financial system is made. So that's what I'm going to explain. So before going ahead, take the screenshot of the points which I have written on the board regarding the structure of Indian financial system. Now, the topic in this video is structure of Indian financial system. Now see, the Indian financial system refers to the system of borrowing and lending. That means there are people who borrow and the people who lend the money. So it's a system. Indian financial system is a system of borrowing and lending of funds, or the demand for and supply of funds. There is demand of fund and also there is supply of fund. So Indian financial system is a complete system where the funds are borrowed and lended by all the individuals, institutions, companies and government. All these are the participants of the Indian financial system. And the Indian financial system is broadly classified into two categories. That is organized financial system and unorganized financial system. First of all, organized financial system. It's a system which is completely regulated, controlled by the regulatory authorities. The regulatory authorities are Ministry of Finance is there, RBI is there, SEBI is there. Apart from that, so many regulatory bodies are there which control, which govern the organized financial system. The organized or formal financial system consists of network of banks, financial institutions, investment institutions and a range of financial instruments. The complete organized system is a network of banks, then investment companies, non-investment companies, apart from that government, individuals, all these are the participants in this organized financial system. So organized financial system comes under the responsibility of Ministry of Finance, RBI, Reserve Bank of India, Securities and Exchange Board of India, SEBI and other regulatory bodies. So all these regulatory bodies will control, will govern the organized sector. Now, the organized financial system is divided into four components. The four components are financial institutions, financial markets, financial instruments, and lastly financial services. These four are the components of financial system, organized financial system. Now one by one we will discuss. First of all, financial institutions. The financial institutions are the intermediaries between the borrowers and the lenders. The people who lend and the people who borrow, the intermediaries between the borrowers and the lenders are the financial institutions, and help in the allocation of funds in appropriate way. Then not only mobilize the funds from the savers and make the investment, but investment should be made according to plans. In an appropriate way, investment should be made. And financial institutions include, so many financial institutions are there in India. The important financial institutions are non-banking financial institutions like Development Financial Institution, non-banking finance companies, Housing Finance Corporation, and apart from that, term finance institutions. They will give long-term funds. like IDBI, Industrial Development Bank of India, ICICI, Industrial Credit and Investment Corporation of India, IFCI, Industrial Finance Corporation of India, SIDBI, Small Industries Development Bank of India, and IIBI, Industrial Investment Bank of India. These are the term financial institutions. Apart from that, specialized financial institutions like EXIM, Export and Import Bank of India, and TFCI, Tourism Finance Corporation of India, IDFC, Infrastructure Development Finance Corporation, NABARD, National Bank for Agriculture and Rural Development, NHB, National Housing Bank. And lastly, mutual funds such as UTI, Unit Trust of India, and insurance companies like LIC, Life Insurance Corporation, and GIC, General Insurance Corporation, state level financial institutions. These are the complete list of all the financial institutions which are the intermediaries between the borrowers and the lender of funds. So these financial institutions will play an important role in allocating the funds in an appropriate planned way. Now, financial markets, the second component of the organized financial system is financial market. So normally a market is a place where buyer and sellers will meet, interact, and conduct the transaction. But from finance point of view, financial market is the interaction of the borrower and lender of funds. Here the commodity is fund. There are people who are having savings, surplus fund, and there are people who are borrowers who are needing the funds. Now financial markets are the mechanism that enable the participants. The participant in the financial markets are borrowers, lenders, financial institutions. All these are the participants in the financial market to handle the financial claims. The financial claims are the instruments on the basis of which the borrower and lender will come in contact with each other with the help of claims. To settle the claims, this financial market will come into existence. This market also facilitates the participant to combine their demands and requirements and to set prices of their claims. So this financial market will combine the borrowers and lenders, and this financial market will help in fixing the prices of the claims, like the value, the price of shares, debentures, bonds will be fixed, will be set with the help of financial markets. Now in India, the financial markets are classified into two categories, that is money market and capital market. The money market is a short-term funds market where funds are borrowed and lended for a short period of time, within 1 year. And capital market is a market where funds are lended and borrowed for a long period of time, more than 1 year. Similarly, one more classification of the market is primary market and secondary market. The primary market is the first issue market where the securities are first time issued by the companies. Secondary market is the market where existing securities are bought and sold. These are regarding financial markets. That is the second component of organized financial system. The third component of organized financial system is financial instruments. It's the document which is used in order to borrow and lend the money. So a financial instrument is a claim against the institution or a person regarding the payment to be made at a future date in the form of dividend or interest. Only on the basis of financial claims, the interest and dividend can be received. So these financial instruments are the documentary proof that the money has been borrowed and lended. Example, when a person buys the shares, the share is an instrument which is an evidence that a person has made the investment in the company and the company has raised the funds from the savers. And in return, the company will pay the dividend or interest on the basis of this claim, instrument. So financial instruments are categorized on the basis of term and type. On the basis of term and type, financial instruments can be categorized. For example, on the basis of term, the instrument can be divided into short-term, medium-term or long-term instruments. Similarly, on the basis of type, primary security and secondary security. Primary security means the security which is first time taken from the issuer, whereas secondary security means the existing security which is purchased. Now, these are financial instruments. The lastly, financial services. This is the fourth component of Indian financial system, organized financial system. Now, financial services. Nowadays, the financial institutions will provide a number of services to the borrowers and lenders. These services provided are, financial institutions provide key financial services such as depositories, custodial, credit rating, factoring, forfeiting, and merchant banking, leasing, hire purchase, guaranteeing, portfolio management, underwriting. All these are the financial services which normally provided by financial institution to help the borrower and lender. Right? Now, financial services play a vital role in creating the firms, expanding the industries, and attaining economic growth. So, in a number of ways, these financial institutions are providing the financial services to the organizations so that they can expand, they can be created, expanded, and help in economic development of the country. So far we have discussed about the organized financial system, which consists of four components. That is financial institutions, financial markets, then financial instruments, and lastly financial services. Now we'll move on to the next sector, that is unorganized financial system. So unorganized financial system consists of network of people who are less controlled. That means on this unorganized financial system, there is not much control. That means there is no specific rules through which we can be able to control this unorganized financial system. It will not come within the ambit of control of RBI or any other regulatory body. Now, unorganized financial system are not directly responsive to RBI, Reserve Bank of India. The informal financial system is again divided into 5 components like money lenders. The first example of unorganized financial system is money lenders. These are the people who lend the money, small amount of money to the borrowers for a short period of time. So, money lenders are those individuals who lend money in small amounts. The interest charged by them is very high compared to the interest charged by the bank. So, normally they will not take any security. That's why it is a risky lending. On account of risk involved in this money lending, they will charge more rate of interest. Now, local banker. Second, component of unorganized sector are local banker. Local banker are the individual who provide credit facility in the rural areas, in the village areas. Some local bankers are there who will provide the credit facility to the borrowers. They play a vital role in the development of rural areas and national economies. Local areas are banks established by cooperative banks. There are cooperative banks in rural areas. These cooperative banks will establish this local banker. And particularly the local banker will be helpful in developing the rural areas. Next come traders. Traders are the brokers. So trader is an individual who deals with buying and selling of financial assets in a financial market on behalf of any person or institution. So these traders will buy and sell the securities on behalf of an individual or a business. So they are providing a broker service on commission basis. They contribute to hold the assets for a short period of time and they receive salary or bonus on behalf of their client. Next comes landlord. The landlord is an individual who is the owner of the house and receives rent from the tenant to whom he has rented or leased his land. The landlord is also one of the component of unorganized financial system. The last one is pawnbroker. The pawnbroker is also one of the component of unorganized financial system. What do you mean by pawnbroker? It is an individual or business who provides secured loan to people against collateral security. In the rural areas, in village areas, pawnbrokers are there who provide the loan facility on the basis of collateral security. They will take the security and give the small amount of loans. The word pawn is derived from the Latin word pignus, which means pledge. Actually, pawn is the word taken from Latin word, that is pignus, which means pledge. A person will pledge something with the pawnbroker and take the loan. If the borrower has not repaid the loan amount, the pawnbroker will sell away the security and realize the amount of loan. So if the money is not returned to the pawnbroker, the collateral security is sold to recover the loan amount. So these are the 5 components of unorganized financial system. That's it. So in this video, I have explained you about the structure of Indian financial system, which consists of organized sector and unorganized sector. The 4 components are there in organized sector and 5 examples we have taken in unorganized financial system. Frequently in examination, a question will be asked regarding the structure of Indian financial system. So watch the video twice, thrice, so that you can be able to understand, remember the points, and you can write excellently in examination. Inshallah, we'll continue the next topic in this financial institutions and markets in the next video.